Ladies and gentlemen, dear Brexit fans or not, welcome to a new session of the PwC TLS Brexit webinar. Prior and foremost, I hope that you and your family are safe and healthy in these difficult times. A Brexit webcast again. Well, actually not really. This is rather a Brexit tale or nightmare. Once upon a time, there were 28 member states, 28 countries, that used to form the largest trading bloc of the world. Marriage was not always a happy or nor an easy one, but the bounds between the different countries actually were really tight. Till that one day of March, 3 years ago, that Article 50 was invoked by the UK. The end of a marriage. A sustainable and certain relationship now turned into an uncertain future, an unpredictable situation. You are precisely here to hear more about the Brexit. Maybe from time to time a bit less about the details, but what you can expect in the first position is to hear about the uncertainty that we are living. All your corporations are living into an uncertain situation for more than 3 years. What we will try to do with the 3 fairies that will accompany me is, with a magic wand, to undisclose a bit more about the regulatory and legal changes under the Brexit, the people and organizational changes under Brexit, and also the VAT and customs aspects. So I think that these 3 areas are key from a tax and legal perspective. We hope that the elements that we will bring forward will help you in your Brexit journey to go from a Brexit nightmare to maybe a Brexit tale, and to start shipping into water that are more calm, where you can finally do what you do best, focusing on your core business. Thanks a lot. After this introduction, I would like to introduce myself. My name is Lionel Van Riet. I'm one of your hosts today. I will be joined by, as I said, 3 fairies. Caroline, that will take the regulatory and legal aspects. Nadia, that will take the people and organization. And Claire, that will take the VAT and customs aspects. Thanks for joining in such a huge number. We have quite a busy agenda for today. A quick overview, where do we stand? That will, in a few minutes, just give you a few hints on that one. I will pass on to Nadia, to Caroline, after that for the regulatory and legal aspects. Stay tuned. This one is really important as well, and a difficult nut to crack for a lot of companies. Then we will move to people and organization. We feel that in terms of people and mobility in our heart and in our private life as well. So that's really fundamental to take this into account. And then of course a bit closer to what I know best, with Claire, we will go around the VAT and customs issues. So that's for today. Then we also have a few polling questions so that you can see how your peers and all the people that have joined today feel about their preparation for Brexit, but also other elements that we will disclose when time is there. But without further ado, let's go on with it. On the where do we stand? Let's see a bit one of the famous timeline. You see them in different colors, in different size and shape. I think that what is really important here, and what I want to do here, it's not really to stop on dates, but to give you a bit the feeling of last week. There was that Brexit summit, EU-UK, where a lot of hopes were put in there, certainly to work towards a free trade agreement. We will have a deal, or we will be left empty-handed with no deal on the 1st of January. Results are not the ones expected. So EU have asked the PM of the UK, Boris Johnson, to continue discussing. While Boris Johnson has said, yeah, that's the last chance to strike a deal. So if that's not flying on the 15th and 16th of October, then Let's prepare to have a no deal. Europe tried to open up the door, and there was said that actually Michel Barnier would travel to London to pursue those discussions. This morning we heard indeed that today will not be a discussion day in the UK around Brexit. Boris Johnson has pushed that back somewhere this week. So you can feel that the tension between the different parties, the two parties, is quite high. Everybody preparing themselves to what becomes a bit the inevitable a no deal, or at least a real Brexit on the 1st of Jan. And I must say that from what I hear from the companies, at some point in time, because it lasts so long, people are also expecting to know exactly what the situation is. Read, then actually, even if it's not something that we like and we want, well, let's go on with it so that actually we can focus on what really matters. It means our businesses. Where do we stand in Brexit? Few elements. We put four options. Of course, a well-known one. A well-known one of option one, conclusion of free trade agreement. Of course, that's something that has been out there for quite some time, but you know as well as I do, that actually negotiating such a huge deal after more than 40 years of marriage, that takes time. Of course, there has been already quite some time, but I remember that, please do remember that the UK left the EU on the 31 of Jan this year. So actually that leaves a bit, not that much time with in between in order to negotiate that deal. Discussion should have started in February. They have started in February, and guess who was there in Europe as from March? COVID was there. So that also has had a detrimental effect on the discussions. So there, first option, FTA. Second option, agreement on certain fields, on certain elements. Both parties have some very important elements to push forward. So that's what we're talking about. Do we have an agreement on fisheries? Do we have an agreement on the state aids? A governance agreement. What do we do with the Northern Ireland? The famous internal market bill of the UK. Is it acceptable for Europe? Yes or no? These are elements that needs to be answered. The third one is, of course, the no-deal Brexit. It has been there as being the nightmare, the cliff edge solution, the no-deal Brexit. Now, what I feel from a lot of people is that it's a bit less cliff edge than before because people are getting prepared. So I think that this should be also. And then we put up also an option 4 that is not really in the books, but actually one of the option 4 is the last political twist that at the last minute could happen. Would that be the case this time? I mean, honestly, that's a possibility. That's a possibility because that's really something that we've seen numerous of times in the last month and years. So why not? No. So that's a bit where we are on the 4 element. I will have you to do some work now with the polling questions. A polling question, it could be self-explanatory, but also we would like to know from you whether the COVID-19 impacted your Brexit preparation, yes or no. There, with a different element, so you have either it's no impact as you haven't started the Brexit preparation, no, because we continued our preparation irrespective of COVID, or yes, it slowed down our Brexit preparation. We will leave you 25 seconds to answer those ones, to answer those questions. Please don't hesitate to cast your vote. I think it's important for the whole audience to a bit hear from peers what it is there, what is your feeling and stuff of the like, and I think that actually we will share the element there. So we're looking at I'm leaving a bit of time for users to get the result inside. I'm going to send them now. Results are, of course, coming in as we speak, so might not have everybody there, but actually let's see what it gives. I send the results to the polling. Hope that you are able to see it. If that's not the case, first answer. 12% of people no impact as we had not started. 59%, and that's quite a good no, because we continued our preparation irrespective of COVID. Not only courageous, but actually quite important. And then 28%, yes, that slowed down the Brexit preparation. So you can see, you can look at this like that as well. So that more than actually 80%, 88% are already fully busy with the Brexit preparation. I can only just say that I congratulate you, because that's exactly what you should be doing as we speak now. Intro and the first part is over. I will hand it over to Caroline now, and then I will find you back when we talk with Claire about the customs and VAT. Caroline, back to you.
Thank you very much, Lionel, and thank you very much, everybody, for filling out that first polling question. Indeed, like Lionel, I'm really impressed, because 59% of you actually continued preparing regardless of COVID-19, and I think that that's excellent news. When we now look at this first slide that I have in this section on, Brexit, COVID-19, what happened, this directly connects to this. When COVID happened, as you know, we actually had a chance, which doesn't happen very often, it's quite rare, to see a force majeure event in action. Many commercial transactions indeed had to be interrupted, suffered delays, could not perform according to expectations because supply chains were affected. And indeed, at that point in time, having a contract with a force majeure provision is quite useful, because it allows you to suspend it correctly and, if need be, to terminate the agreement as well. Now, especially when Prime Minister Boris Johnson actually was diagnosed with COVID-19, there was a certain expectation that maybe the transition timeline, so the timeline that we're in now, the timeline that started after the 31st of January, when UK left European Union, and before the end of the year, the 31st of December, we expected maybe there'll be discussion on some extension or some additional time to basically take that into account. But that's not what happened. We have seen a very consistent approach taken by the UK, where they've said all the time, really, through the transition, we don't want to extend. So they did not use COVID for any kind of extension either, and they didn't request an extension in July. And that brings us to today. As Lionel just mentioned, expectations were still high for the last summit. We definitely hoped in the summer that by October we would have some sort of improvement, some sort of clarity. But Friday happened and we don't. So on the slide here, you see two quotes of the end of the summit. And as you can see, the European Union said that not enough progress was made with regard to the topics of interest to the EU, and that specifically are always fisheries, governance, and in addition, the level playing field. And it's remarkable that the European Union also said, look, in addition, we are concerned about what we already agreed on, the Withdrawal Agreement, our divorce, and what you are doing in the UK, because you may have heard of a very contentious, a very controversial piece of legislation in the UK, the Internal Market Bill, that raises concerns with regard to the North Ireland Protocol. So in other words, I agree, the atmosphere at the summit was not great. It became indeed worse when Boris Johnson said that he doesn't see a reason to continue to talk, but we should focus on the actual end of the transition. And as he said, that the EU doesn't seem to be willing to give the UK a Canada-style agreement, although that the UK has rules and regulations that are extremely similar and close today to the EU. So this is where we are now. COVID happened. It's a big deal. I'm happy to see that most of you have been able to continue preparations, and that therefore the situation is probably not such a disturbance on your side, as we have been looking at Brexit now for a long time, and we've been preparing plans, we have been mapping the risks, and we know what to do or which things are most important. So let's see what happens. The good news is that the UK still leaves the door ajar. Today we know that there are additional conversations going on what will happen this week. So let's see. So then let's look now at these main points of difference. What is the big deal? What are the points where these two sides really cannot agree? Why don't we have movement? Well, the big difference can indeed be, we can focus on a few concepts in order to clarify the biggest difference between the two sides. Let's first look at the EU. The EU has published its draft proposal. It's a long document, about 440 pages long. And in that document, we see that indeed the European Union expects one document on the partnership, which is viewed as an extensive relationship with a variety of topics that still will be agreed on between these two parties. The European Union has always made clear that for them, if the UK still wants to have access to the European Union's markets, then it needs to happen upon certain conditions. Specifically, the European Union has always said, we want to have access to the fisheries of the UK. We want to be able to access the exclusive economic zone of the United Kingdom. In addition, they have also always said, look, if we are going to be close partners, we also expect that we agree on a level playing field. So when you look at the next slide, where we point out some of the points that the UK has asked for some of their positions, you can immediately see great difference in approach. Namely, the UK, first of all, says, look, fisheries, we want to negotiate separately. We do not want to be connected, and we do not want to simply provide access as it is today, and it used to be before. We want to be able to negotiate that. So that is the first issue. Secondly, with regard to the level playing field, the UK only wants to commit to more of a standard free trade agreement approach, where there are some commitments with regard to labor standards, climate standards, phytosanitary standards, and so on, tax possibly, but they do not see it as an intrinsic part of the legal obligations of the total agreement. And finally, and connected, there is this difference on conflict resolution. For the European Union, this is one agreement with one conflict resolution where the Court of Justice still has a role to play. The United Kingdom wishes to indeed be much closer to a standard free trade agreement, and indeed the continued important role of the Court of Justice of the European Union has been an issue or a red line, and it continues to be the case. Let's look at one concept a little bit closer, the level playing field. Obviously, we know the term. It's a term that's used in a variety of contexts. Now, the European Union is using this particular term in a specific way. Namely, in its draft agreement, it has put several requirements under the level playing field. So I'm sorry, I see that my audio was not great, so I hope it's better now. So let's look at the level playing field. Scope is state aid, competition, taxation, labor and social protections, environment and health, climate change, and sustainability. Indeed, agreeing on the level playing field is a condition for the EU, and this is definitely one of the problems at the moment. the reason why the European Union does not want to simply give a Canada-style agreement is, look, we are offering you a much more integrated level of economic partnership. And because of that, we also expect that you, a country that is right next to the European Union and with tremendous economic interdependence on both sides, that we have similar standards so that we do not compete unfairly with each other. So it's not just zero tariffs, but it's also zero quotas and zero dumping. Now, the way that the European Union then has written out the level playing field is quite demanding. For instance, when you look at the labor conditions, they have provided for clauses that say, look, you will have the same protections in place that you had at the end of the transition. And furthermore, if the protections increase over time, you cannot unwind those. So that basically the standard can go up, it cannot go down. The most significant request with regard to the level playing field on the European side concerns the state aid rules, where not only there is a request of non-regression, like is the case for labor conditions, but also even to accept that the rules themselves, or the substantive rules, will be actually following or aligned with the European rules over time, and that indeed also the Court of Justice of the European Union will be the court that can pronounce itself on those rules. As you've heard what the UK has requested and what some of their red lines are, this has been an issue. And therefore, on the right-hand side of the slide, you see the UK position. And you see indeed the UK is willing to talk about all these topics, and does so even in their draft. But they are unwilling to create legal obligations, as of course, from their point of view, this undoes quite a bit of the Brexit intention, which was to be able to set own policies in a variety of fields. We have seen some improvement on some of these points during the negotiations of the last months. For instance, UK did come across in one of the last negotiation rounds with subsidy control notes, where they were willing to do more, but it was still not enough. So this remains a topic of interest to be followed. That definitely hasn't been made easier with some of the issues surrounding Northern Ireland at the moment. So when we started this webinar today, we wanted to tell you, we wanted to clarify some of the things of uncertainty, because there's a lot of uncertainty that's still there. But we also want to talk a little bit about what we know already. What do we know? What do we have? And happily here, we have some parts that have been clarified and that we already know and that businesses can benefit from. For instance, the withdrawal agreement, the divorce. You all remember the difficulty that was experienced to draw up this agreement and to finalize it. Now it exists, it's final, it's a treaty, and there are rules in there that are useful and that we can use for some subtopics. One of the topics will be addressed further on by Nadia, citizens' rights. But let's look at a few of the others. Because the withdrawal agreement is not just a divorce where we talk indeed about the children of the divorce of citizens. We talk about finances. So how will we end the budgeting that existed before? How will things be paid back, settled, and so on? How we will negotiate the future relationship. But some of these provisions are actually about some substance as well. And let's look at one of those. One of these concerns intellectual property rights. So this is quite interesting. You may know this already. The transition period is a useful period. It's still running till December. And it's a useful period also for intellectual property rights, because in the withdrawal agreement, it's provided that several of the intellectual property rights, to the extent that they exist before the end of the transition period, can be enforced later on or can be automatically copied into the British legal system afterwards. So this is the case for registered trademarks, community designs, community plant variety rights, geographical indications, and so on. Also rights to databases, for example. Therefore, if you didn't do so yet, and I'm sure you have looked at these things, it is an element that is not always known that well. If you do that, then you can avoid some of the complexities of dealing with IP rights after the transition. At the moment, there is no agreement yet on the future. IP rights is a point of interest for both sides. Given the similarities, let's see what parties will be able to do with that. If nothing would be able to be agreed on, as always, we will have to fall back on the domestic laws and international agreements. And this is the same for IP. What about data flows? Very, very interesting subject. By now, there was an expectation that parties would have been closer with regard to agreeing on the flow of data from the European Union to the UK. But there, indeed, the story is the same. We will have to wait. At the moment, as you know, the European Union has the highest standard of protection with regard to personal data. The standard is the highest in the world, and for that reason, when data of European citizens moves to other countries, to third countries, the GDPR requests that those countries show that the protections there will be equivalent. The Commission has given 12 countries such a decision that states that. For instance, Japan is one of those countries, and Switzerland. And in that case, this obviously facilitates the movement of data. Not only do we have indeed these rules that are highly protective, but we also have indeed the Court of Justice that pronounces itself regularly on some of these aspects. And the Court of Justice also pronounces itself on the quality of data protection in these other countries when it assesses adequacy decisions, which is possible. For instance, a few months ago, the Court of Justice decided that the EU-US data protection shield doesn't actually meet all requirements, which of course has created several concerns or definitely impact with regard to the movement of data from the EU to the US. One of the reasons why the court decided that the protections were not adequate was, for instance, the width of surveillance that's possible in the US. And in addition, there were some concerns about not being able to get legal recourse when there was an issue with regard to the use of personal data in the US. Why am I bringing this up here where we're talking about the UK and the EU and Brexit? Well, because some of the laws in the UK with regard to surveillance have been questioned in the same way. So not only don't we have at the moment much movement on how the parties will deal with the flow of personal data, but we also have an additional concern that the Court of Justice has just pronounced itself on its requirements in a specific way that is relevant in this case. So there, sadly, we don't know yet what will happen. Something to follow, something to continue to monitor. So to conclude this section, when we talk about Brexit regulatory and legal, every business, as you know for sure by now, needs to look at its own specifics in order to understand where the impact is and how it can be addressed. Regulatory is, in this sense, quite complicated because regulatory rules are so specific for products or for service. To summarize, we know that the Brexit story for regulatory means duplication. Duplication truly. At the moment, we know that will be regulatory autonomy, while the EU pushes to obtain more commitments with regard to some of the standards, such as climate-related, quality-related with regard to sanitary and plant health. The starting point for the UK has always been who wants regulatory autonomy. So indeed, something to look at in great detail. There's quite a lot of information out there. To conclude, we already touched on IP, we touched on data flows. To conclude, for the legal and the regulatory, indeed, we have a lot of guidance, a lot can be done, but indeed it should be in your plan so that you know where your risks lie. Let's hope that over the coming weeks, indeed, the negotiations advance and that we get to some more clarity with regard to some of the points that I just mentioned above in the negotiations. And here, I will now close my part and I will move on to the next section of great interest and impact of Brexit. And that is the impact of Brexit on free movement of persons. And that will be presented by my colleague, Nadia Levy.
Yes, hello, everybody. What I want to do in the next couple of minutes is to indeed guide you to what we know and what we don't know yet about the impact of Brexit on the free movement of persons, and more in particularly the impact on the global workforce or the mobile workforce of your company. If we look at the three different stages at the pre-Brexit, the transition period, post-Brexit, for people and their citizens' rights during the transition period, they're still considered as fully being covered by the free movement. Post-Brexit, we will have to consider UK nationals coming into the EU and vice versa as third country nationals. So you have to look at it a bit like whether it is an American or someone from China coming into the EU, or the other way around. They will look at us also like that. What I want to cover mainly is immigration and social security, because that are the two areas when we look at mobile workforce that are mostly impacted. Labor law as well, but that is what Caroline already in her previous section touched upon. And on personal income tax, I will be able to be rather short, as there is not that much impact. Let me maybe start by that personal income tax. During the transition period, it is covered by a bilateral double tax treaty, which exists between Belgium and the UK that remains applicable. Well, as it says, it is a bilateral treaty, and that bilateral treaty will still continue to govern personal tax situations of people moving between Belgium and the UK, still post-Brexit, so post the transition period, to be more precisely. Now, what about social security? Based on the withdrawal agreement, all the reference rules that are currently laid down in EU Regulation 883/2004 and its implementing regulation that gives a coordination of social security rules will remain applicable, for anyone who is in a current cross-border situation. And not only the reference rules, but also all provisions regarding aggregation of periods. So how you get access, and if you have to have waiting periods if you want to avail yourself of certain benefits. And also the export of social security benefits. think, for example, about pension benefits. If you want to move to another country when you are retired, that is where we usually have export of social security benefits. So currently still the EU regulation fully in place. So entitlement and access to social security benefits continue as they are. What is important is to make sure that you have the proper documentation of a cross-border social security position available, meaning one document for proving where a person is subject to social security, as one document, or EHIC cards with respect to people who want to avail themselves of healthcare benefits in another country than the country where they are insured. Now, so very clear for the transition period, nothing has changed so far. But what will happen after the 1st of January? And there's 3 situations that we mainly have to cover. And there the withdrawal agreement is very important as well, because there is a large section on citizen rights, and some things are clear, some things are not yet fully clear. But what does the withdrawal agreement foresee for past situations? That means that provisions of aggregation of periods and export of social security benefits, they remain applicable for anything that you have built up until the end of the transition period. So, for example, a person who was subject to UK social security until last year, but has moved back to Belgium and is subject to Belgian social security as of now, and for the remainder of his career will be living and working in Belgium. Well, at the moment that person will take up his pension, he will still be able to get his pension build up from the UK. So that is to past situations. I think the most important one is in relation to continued situation, because there the withdrawal agreement foresees that the reference rules will remain applicable for as long as cross-border situation between the UK and the EU started before the 31st of December 2020. And it continues without interruption. Now, what does that mean? It means indeed that there should be a cross-border situation. It doesn't mean it needs to be exactly the same situation. So, for example, a person who is now being seconded or being in a simultaneous employment between Belgium and the UK, subject to Belgian social security because the person lives here and has a substantial activity here, that person in 2022 or anywhere, anytime later, moves to the UK, but continues to work in Belgium and the UK, well, that is a continued situation. So as long as there is still a part that is in the UK and a link with another EU member state, there is a continued situation. It should, however, be without interruption. And there the guidance note that was issued by the European Commission, there it was stated that a small interruption should not be harmful. But from my contacts with the Belgian social security authorities, they look at it differently and they say an interruption is an interruption, and then you are no longer covered by the withdrawal agreement. So they will have more the principle of the guillotine. If there is an interruption, you fall out of the withdrawal agreement and you fall into a new situation. For the new situation, we still don't have that clarity that we would have hoped that we would have by now. And there are still different scenarios, although the last one is the most, probably the one that we will have to deal with, unfortunately. So there are negotiations on a new multilateral treaty, which will be not exactly the same as the EU regulation 883/2004, but will have some mitigations on not having to contribute in 2 countries and on some export or aggregation of periods, but still a lot of discussions there. And if there is no multilateral agreement, which we think at the moment is unlikely to be there at the 1st of January, then we had a very old bilateral treaty between the UK and Belgium. But there's a clear political statement from the Belgian authorities that they say, okay, that bilateral treaty will not become live again. We will not avail ourselves of that bilateral treaty. And so we will have to revert back to domestic rules, meaning that you will have to look at both domestic rules in the UK and in Belgium, if it is a UK-Belgium situation, to look at where you have to contribute and what that means for the export or aggregation of periods that are covered by Social Security. So in that situation, there will be still a lot of unclarities on how certain situations will be governed. Now, what about immigration? On immigration, also, if we look at the transition period now, free movement still applies. So you can still travel to the UK, UK nationals can still travel to Europe without any further ado. What is being stated in the withdrawal agreement is that UK and EU nationals residing in respectively the EU or UK will retain their rights to stay and to work also after the transition period. Also for frontier workers meaning someone who is working in a certain country but is not living there, will continue to be able to work during the transition period and also retain their rights after the transition period. Post-transition period, however, they will become third country nationals if it is a new move. If it is not someone who has been able to avail themselves of the benefits of the withdrawal agreement, which means there will be work authorizations or work visa required. And there, I think special attention should be given to business travelers, because business travelers is such a broad term, and you always have to look, if you look for immigration, at what is that person specifically going to do. Because, for example, for Belgium, there is an exemption for business travelers, but that means a person who comes for meetings in close circle. That doesn't mean any kind of activity that you can have. There is from both sides a visa waiver. Visa meaning being able to enter the country for short stays. If we look at it from a Belgian perspective, what does that mean? If we look at the transition periods, the UK nationals will have to be registered before the end of the transition period. They have to make sure that they are registered in Belgium, and they will be invited by the commune to apply for a new type of residence permit that makes clear that they are beneficiaries of the withdrawal agreement. Also, for frontier workers, there will be a similar procedure. So they will normally now, and that is what I would really recommend, if that is not done, they should go to the commune and receive an Annex 15 document that states that they are frontier workers. And it's at the commune, not where they live, because they don't live in Belgium, but where they work. And they will also be invited to have that covered by a new document. The exact procedures are not yet known, so we still need a royal decree to have clarity on the procedures. As of next year, if it is a new situation, so not somebody who is already in a cross-border situation, well, there will be the normal work permits and professional card for self-employed persons procedures to be followed. Note that you can already apply for work permits or single permits as of the 1st of November 2020 for employees. And for self-employed persons, this is already the case now. So as of the 1st of October, any applications could be introduced. It are the standard immigration processes. So there is no fast track for UK nationals. Same salary thresholds for highly skilled employees, which is the most used route, will be applicable. As I said, business travelers, they are exempt if it is for meetings in closed circle, but not if it is for other activities, and it's only limited to 20 consecutive days or 60 working days in a year. And there is a visa waiver for short stay meaning a stay of 90 days in any given period of 180 days. Also in the UK, they have already made some clarity on what it means for work authorizations. There, it is important that people who want to avail themselves of the benefits of the withdrawal agreement, they have to apply for the settled or pre-settled status. And so that means that also they have to register to prove that they are already in the UK. And they have the time to do so until the 30th of June 2021. But it is recommendable, if possible, to do it before the end of this year. For example, if you need to have a bank number, or you have to have some benefits that you need to apply for, then it is very important that you should already fulfill that pre-settled status or settled status application before the end of this year. For employers, because as of 1st of January, they will have to have work authorization for the people they want to hire, for EU people wanting to hire, and also there they fall on the same immigration rules as any other third country nationals. And in the UK, they will have a totally new system, and it will be a points-based system. And it is very important that an employer is a authorized sponsor, so they have a sponsor license to really attract certain people. And therefore, what is important is that you make sure that if you do not have that already, that you apply for that. And if you have it, that you verify that you're fully compliant with all regulations, so that you can introduce any application without any further hiccups or timelines. Now that was on a very short basis what is for people, and I do have a polling question for you. Namely, is your company prepared for Brexit in relation to your workforce? And so you have 3 answers that you can give. No, we have not yet started our preparations. Yes, but only with respect to the current workforce. And yes, both with respect to the current workforce and for new moves as of 1st of January. And I will give you some time to actually complete it. And I will send you the results. Well, if we look at it, the majority has done so for the current workforce. Part of you already for the full-fledged, so also for those people coming after the 1st of January 2021. And yeah, still about a quarter who has not yet started. So therefore, key takeaways: make sure that you have an assessment of your employees who might be impacted by Brexit. Ensure that all current cross-border employees have the proper documents to carry on post-transition, both for immigration and social security perspective. And discuss and plan your future recruitment strategy, your policy for the post-Brexit period, and factor in that there will be additional costs, there will be additional lead times, paperwork for new hires, and also the impact on the social security coverage, not only on the contribution side. And that was it from my side, and I'm handing over now again to Claire and Leo.
Okay, thank you very much, Nadia. Now, that brings us to the impact of Brexit on VAT, customs and international trade. It is clear that besides an impact on the legal and people side of business, that the indirect tax aspects of doing business will, of course, also be impacted by Brexit. In the next slides, we will have a further look at the VAT and the customs aspects of doing business with the UK after the transition period. Now, the actual impact will depend on which type of transactions your business has with the UK, whereby we have made a distinction between the first one, you're selling to customers in the UK. The second one, you're purchasing or sourcing goods from the UK. And last but not least, you actually have production in the UK. When we have a look at the first slide, we emphasize the situation whereby, indeed, you would be selling goods to customers in the UK. So the goods would be transported from the European Union to the United Kingdom. It goes without saying, and I think everybody knows it in the meanwhile, currently those transactions are intra-community transactions, but they become export and import transactions. So an export from the EU and an import into the UK. Now, a first hurdle to tackle in this respect is who will act as importer of record. Because if the import includes two parties, being a seller and a buyer, and not just one business moving its goods from the European Union to the UK, the parties need, of course, to agree on who will be responsible for the importation. In that respect, you have two options, which we have worked out on this slide. It can be you as an EU supplier, you may perform the importation into the UK, or it may also well be your customer in the UK. Now, if we start with the first option, being you as an EU supplier would perform the importation into the UK. In that respect, you will need to identify yourself to the customs authorities for that importation through a so-called EORI number. For the exportation from the EU, you will also need an EORI number. So in other words, in order to be able to declare the importation into the UK, you will require a UK EORI number, but in order to be able to declare the exportation as from the European Union, you will require an EU one. In other words, you will require two EORI numbers, one EU and one in the UK. Furthermore, you should determine who will comply with those customs declarations. So who will draw up those export and import declarations? Will you do it yourself, or will you appoint an intermediary? You will need to review the product classification, as these will determine the actual import tariff. You will, of course, upon that importation, make a payment of the UK VAT and make payment of the import duties. In respect of the exportation, you will need to issue a pro forma invoice without VAT for the export, which will, of course, also be used for the importation into the UK. Now, in order to be able to perform the importation into the UK followed by the local UK supply, you will need a UK VAT registration number. Now, contrary to some of the EU member states, the UK currently does not foresee in an obligation to appoint a fiscal representative for EU companies. As regards the local UK sale, you will need to issue an invoice with UK VAT because the UK currently does not foresee in any local reverse charge mechanisms. It goes without saying that if you need to issue invoices with application of VAT and you're registered for UK VAT purposes, you will of course also need to have UK VAT compliance, which has to be set up. In this respect, your entire ERP system has to be updated with all the required changes, which ranges from the invoice statement, which have to be adapted, over the reporting in your VAT return. So you see, to the extent that you as an EU supplier would perform the importation into the UK, there are a lot of formalities to observe. A second option, as we stated just before, is that your customer in the UK would perform the importation. In that respect, the customer in the UK would require an EIORA number in the UK. So you would need to verify that he actually has that EIORA number. Second question, who will fulfill this obligation? So who will draw up the import and the export declarations? Will it be you or will it be your forwarding agent? You will also need to review your product classification, as that will determine the tariff of your importation. Now, whereas in the first situation whereby you as an EU supplier would act as importer of record of the goods in the EU, you had to draw up an actual invoice with local UK VAT, because you were then performing a local UK sales after the goods were imported into the UK. To the extent that your customer would perform the importation in the UK, you would only perform, from a VAT and customs point of view, one transaction, namely an exportation. To that extent, you will need to draw up an invoice without VAT, because it will be an exportation. Also here, you will need to adapt your ERP system to cope with all those changes. So we're currently, in respect of the sales, you're issuing an invoice without VAT and you make reference to the intra-community supplies. Now you will need to make a reference to the exportation exemption. When you make reference to that exportation exemption, you should also reflect on the fact, well, who will store that export declaration? Because that export declaration is a crucial element in order for you to claim that exemption from a VAT point of view. Because during a VAT audit, the first question which will be raised by a Belgian VAT inspector will be, well, please provide me with sufficient proof that indeed those goods have been exported. And then it is required to show them that export declaration. Now, it is clear that you have both options. Either you as an EU supplier will perform the importation or your customer. Now, how is that determined? Well, although you can clearly decide upon, the Incoterms used in respect of the supplies are very important. Because if you're going to supply under an Incoterm DDP, delivered duty paid, it is in principle you as an EU supplier who will be liable to perform the importation into the UK. So watch out for those Incoterms. Now, on the next slide, we will have a further look at some very specific VAT attention points. We just saw that you as an EU supplier can perform the importation into the UK. When you perform that importation into the UK, you will of course need to pay the import VAT and you will need to pay the import duties. Now, it is very important in this respect to retain that as a general rule, the UK will foresee in an import deferral license like we have in Belgium and which is called our ET 14000 license. The big difference here is that in the UK, you will not need to apply for such a license. So everybody can use it as soon as you are registered for VAT purposes in the UK. You will also need to review the application of some of the VAT simplifications in your supply chain, because indeed, most of the simplifications like triangulation, call-off stock or consignment stock are limited to EU transactions. Finally, special attention is also to be given to Northern Ireland. Because from an indirect tax perspective, Northern Ireland remains part of the EU customs union, which entails that sales to Northern Ireland will still qualify as intra-community transactions and not as exportations. So when you supply a good from the European Union to a customer located in Northern Ireland, you perform an intra-community supply. Now, to safeguard the exemption of your intra-community supply, the EU Commission suggested to create a very specific Northern Ireland VAT number with the prefix XI. To date, however, the UK government has not yet responded in that respect. What's also very important to notice is intrastat. So the transactions between the EU and the UK, they become export and imports. Special attention, however, to be given to Northern Ireland. Now, that entails that as a general rule, you should not include those transactions in your intrastat returns. However, HMRC is retaining the import intrastat obligation so it can track import data. So as the UK, and Leo will come back to that later, the UK will allow importers to actually defer their import customs declarations between the 1st of January and the 30th of June this year. So continuing the obligation to file intrastat returns is essential for the UK to actually monitor their imports. Now, this requirement will in principle only last during the first year, being 2021. Finally, another very specific attention point is the so-called B2C supplies. So those are sales whereby your customer is a private individual, typical e-commerce sales. Now, goods originating from outside the UK with a value not exceeding £135, which is on average 150 euros, will be subject to VAT on the sale instead of import VAT. So you will not need to pay import VAT. However, you will need to issue an invoice with application of UK VAT to your UK customer. You can only do that to the extent that you ask for a UK VAT registration number. In other words, you need to be registered for VAT purposes in the UK. Now, these B2C supplies, that reform actually mirrors the EU e-commerce package, which will also kick into force as from the 1st of July 2021. Now, that brings us to the next slide, where Leo will guide you through some very specific attention points from a customs perspective when selling goods to customers in the United Kingdom.
Thanks, Claire. So yeah, indeed, we have had of the sales between the EU to the UK. Now let's have a look at some very topical customs questions. Of course, a lot have been said already, so keep well in mind what Claire has said also on EOI number, because of course that has a direct impact. Now, first comment. Different ways to declare your goods when they are coming to the UK. First of all, 3 different periods have been highlighted by the UK authorities, by HMRC. So technically, some of us are telling that for the EU, the no deal or the Brexit goes up on the 1st of Jan, while importing in the UK, that will be the 1st of January, that will be mid of, and that will be 1st of July. So technically, what does that mean? It means that on the 1st of January, what the HMRC and Border Force are intending to do is to actually try their utmost best in order to avoid blocking goods from entering into the UK. Okay, that's first point. Second point, second moment, it's in mid-April, where other type of product will indeed be included into the control and the acceptance into the UK. So that's really important. You can read that in the phased implementation approach on the slide. And then the last one is July. In July as well, there again an important moment where a decision are being taken. So 3 different moments to enter the UK. That's one point that's really important to mention. Second point that's really important to mention also has to do with compliance. It's also the different types of customs declaration that you can lodge in order to enter into the UK. You have, of course, we mentioned them there. We have, of course, what we say the deferred declaration, whereby by only submitting a temporary declaration, you defer the lodging of the final declaration for a period of 6 months. That you need to request the possibility to do so, but that enables not only HMRC to get less very important declaration in one go, but also your businesses to somehow go a bit more easy on terms of the implication of those declarations, so the deferred type of declaration. Of course, it exists also the standard form, where when you have all the information and all your structure been set up, you can lodge all the necessary information into your customs declaration. The simplified customs declaration, of course, whereby based on certain authorization that you have, certain simplification authorization that you have, you can reduce the number of data that you need to add to your customs import declaration, but also the way you present them. So that's the three, I would say, more general type of import declaration that you can do: deferred, standardized, simplified. But then again, also you can do transit declaration. Transit declaration does exist and is accepted. They have signed a transit convention. So in the UK, you can roll up in the EU. Sorry, you can roll up T1 documents, for instance, that goes into the UK, and in the UK you will need to clear them. What do you need concretely for that? You need an authorized consignee authorization to get the goods in the country as fast as possible, but also to be linked in with the NCTS in the UK, of course, to ensure proper importation. So these two elements, the phased implementation approach by the UK, and also the way to declare the goods upon arrival in the UK, are two compliance elements that really need to be kept in mind. A lot of people are talking about FTAs, and rightfully. Free trade agreement, origin, preferential origin. Do not forget that whether we have a free trade agreement signed or not, it doesn't impact the compliance. It doesn't exclude or exempt companies to draw up customs declaration. I know that a lot amongst you, they know that, and they're on top of their game in this respect, but do not ever forget that this is something that is really important. The fact that we sign a deal with the UK authorities doesn't exempt you to draw those customs declarations. Very important. I mentioned origin. I know that in the questions we have, and I can take that example because it's ties up nicely with what I'm about to say about customs valuation. We have one of the question that is posed by a company, I think active in the textile industry, that says, if we don't have a EU free trade agreement between EU and UK by the moment of Brexit, if I import goods from Asia, and if the EU has some customs free trade agreement with that country in Asia, so EU Asia, we have a free trade agreement. If I import that and then subsequently I export that to the UK so post Brexit, after 1st of Jan, what is the situation? Can I get a reduced rate? No, you will not be able to get a reduced rate if the goods are declared directly in the UK. So it means that goods are coming in Europe. You have preferential originating goods. They are coming in Europe. You import them in Europe and then you export them to the UK. You will not have a preferential rate in the UK. The goods have been imported in Europe. You will not have that. If the goods are still preferential, but you don't import them in Europe, and then you, by means of a transit or by means of bonded warehouse, you ship them, you export them to the UK, and you put them under a suspensive regime there, you will not in the UK have to pay the duties immediately. But when the goods are brought into free circulation in the UK, at some moment in time, you will have to pay the duties as they are foreseen in the UK legislation. So if the UK doesn't have a free trade agreement with Asia, you will have to pay UK duties on this. Why I'm using that example, and when you say that actually, and you see customs valuation, I told you that. Why? Because one of the things that we see a lot with Claire is companies in the retail, companies in textile, but certainly not limited to that, food and drink sector, of course. When you import goods into Europe or in the UK, and subsequently you know that you need to go to the other territory. Here we take the direction EU-UK. You import goods in Europe, and you know that a part of them needs to be sold in the UK. Pay attention. The UK will be separate from the EU, so it means that it will be a third country to the EU. So it means that the price of your goods and the taxable basis upon importation in the UK could increase more than substantially. Why? Because you will not use the price that you receive from your supplier already, but you will have to use, unless you have a ruling with the authorities in the UK, you will have to use the price between European entities and the UK entities. And technically that price will be, by definition, higher than the one you receive from your Asian supplier. So pay attention there. It has a direct impact on your taxable basis. You will pay more duties. And as Claire said, think about the VAT, because otherwise your taxable basis also for VAT will be higher. Very important to mention. And that ties in nicely with origin on one side and valuation on the other side. Those two pillars there, you need to control them. Then after compliance, origin, and valuation, we need to talk about the tariff. Of course, we need to talk about the tariff. I mean, it was really out there to be discussed throughout that 3 years of Brexit. Theresa May has issued an Excel spreadsheet with more than 80% of goods being exempted from duties. Boris Johnson, 1 week in the office, has updated that one. Now they have published it. You have a few of these elements that are mentioned on the slide. That's really important. As from the moment the UK will step out of the EU, I mean operationally then, duties will be imposed, and it's UK duties that will be imposed. So on some goods, pay attention, have a look, this is published. On some goods, you can have a better deal, because actually the duties might be less than what you expected, could be exempted, but on others, pay attention. The UK also needs to protect its market, so duties are imposed and out there. All right, so that's really important. In order to close on that on that slide, still two remarks to be said. One, indeed, deferment account to the UK customs duties. Please do that. Make sure that you have one. That's important. That takes some time. We also now are mid-October, so with the 70 days and stuff to go to the Brexit, you cannot get all your authorization in 17 days, but you can get a duty deferment account. It takes a bit of time, but please do it in order not to be penalized by that as from the 1st of January. All right. Final word on that slide before getting back to Claire. Final words on that slide. You see specific customs procedure. Here we mentioned the CFSP. So it's a simplified procedure upon importation in the UK. You have others, of course. Some people amongst you are using bonded warehousing, inward processing relief. They all exist in the UK, of course, but it takes time. I mean, you cannot just like this get from the HMRC an IPR license, inward processing license, bonded warehouse license in 70 days. Why? Because by the time you apply, they do the audit, you implement. You cannot do that in 70 days. But of course, if you are facing an issue there, you can also plan this. And when I say plan, reach out to customs brokers where you can use, for instance, their bonded warehouse license in the meantime, in order for you not to lose any money upon importation. Okay. Now, Claire, maybe back to you. We saw the EU-UK direction. Let's go UK-EU now.
Yeah, indeed. Thank you, Leo. So that brings us to the second type of transaction, whereby indeed the goods will be shipped from the UK to the EU. Now, although it is clear that the consequences are quite similar to the opposite movement. There are, of course, some differences. Now, also in the interest of time, I think I'm going to focus on the differences. Now, first of all, it goes without saying that also this type of transaction will, as from the 1st of January, qualify as an actual import and exportation. So you will also have the question, who will act as importer of record? Now, who will act as importer of record in the EU now? Also here we have both options, so it can be either the supplier or you as an EU customer. To the extent it would be your UK supplier, he will have to hold 2 EORI numbers, so that is exactly the same thing. He will also need to register for VAT purposes within the European Union. He will need to take into account all the changes into his ERP system. To the extent the EU customer would act as importer of record, also exactly the same. You will then need to hold a valid EU EORI number to be able to import the goods into the European Union. You will need to decide upon whether you will perform those customs compliance obligations in-house or whether you would appeal to a customs agent. You will need to pay the import duties and the import VAT. And of course, you will need to make the changes to your ERP system. Now, just as for the opposite transaction, also here, one of the major elements to take into account are, of course, your Incoterms. So please review those carefully because they will have an impact on who has to act as importer of record for the importation of the goods into the European Union. Now, as stated, I think we should best focus on those specific attention points. And if we first start with the specific attention points from an VAT point of view, let's start with the import VAT. So we just saw that from the UK side, there will be that specific import deferral license. So there you can defer the actual payment of the import VAT to your UK VAT return. And one of the questions we already received in the meanwhile was, does that only apply to UK established companies, or does that also apply to, for example, a Belgian company who merely has a UK VAT registration number? And there we can confirm that that import VAT deferral, which will be foreseen in the UK, will apply to all UK registered companies. So even a Belgian company who has no establishment there can benefit from that license. Now here we were discussing the other way around. So goods are brought into the European Union, whereby of course you will need to review in the member state where the importation will be performed, whether there is an option to have such an import deferral license. Major difference here between the UK and the EU. In the UK, you can automatically apply that import VAT deferral license, whereas from a European side, most of the EU member states foresee that you actually need to apply for that, that you actually need to file an application to benefit from that import VAT deferral license. Also here, the UK company, to the extent that that UK company would act as importer of record of the goods into the EU, then he would require an EU VAT registration. Now, not most, there are a lot of EU VAT member states who actually require non-EU companies, which will be a UK company after the 1st of January, to appoint a fiscal representative if they need to register for VAT purposes. So an EU company that needs to register for VAT purposes in the UK does not require to appoint a fiscal representative, whereas a UK company that has to register for VAT purposes in one of the EU member states, it may be possible that it has to appoint a fiscal representative. For example, Belgium, here, any UK company who wants to register for VAT purposes will be liable to appoint a fiscal representative. Northern Ireland, exactly the same thing. Goods coming from Northern Ireland into the EU does not qualify as an importation, but qualifies as an actual intra-community acquisition. And then one final point regarding B2C supplies. So those are the supplies made to private individuals, which are located in the European Union. There, a distinction has to be made between the transaction which will occur between the 1st of January and the 1st of July, and the transactions which will occur after the 1st of July. Now, why do we have that difference? That is that as from the 1st of July 2021, there will be a new set of rules dealing with e-commerce within the European Union. Now, between the 1st of January and the 1st of July 2021, the old rules are still applicable, but the major thing that changes is that suddenly the UK is no longer part of the European Union, so you can no longer invoke the so-called distance sales rules. So if we have a look at the situation before the 1st of July 2021, the concept, as I just said, the concept of distance sales can no longer be applied. So as from the 1st of January, goods coming from the UK and shipped into the EU will have to be imported. Either you request your private customer to do that, either you as a UK company can also, of course, perform the importation. Now, if the value of the goods is below 150 euros, you can claim, potentially, depending on the type of goods, you can claim an exemption of import VAT and import duties. As from the 1st of July 2021, from that day on, as I just explained, the EU introduces a new set of rules regarding e-commerce, whereby goods coming from outside the EU, those companies can apply the so-called import one-stop shop, which will allow them to declare and pay the VAT, which is due in all the 27 EU member states through one and the same VAT return. That brings us then immediately to Leo again for the specific attention points from a customs perspective in this respect.
Yeah, thanks, Claire. It's me again. UK, EU, what are there the attention points? I think that also first element on compliance. Unlike the UK, Europe doesn't recognize or hasn't implemented a phased approach. So technically, 1st of Jan is the cliff edge date then to be ready for your importation in the EU. So technically, you would go for real right from the start. So 1st of Jan, you need to be ready to enter the EU as you would be any other third country import, an import from China, an import from South Africa, an import from the US, an import from the UK, 1st of Jan, it's all the same. So that's where also I think that it's quite important for you. That's one tip also that we would like to give. It's also make sure that you anticipate that. Why? Because you need to realize that between the 31st of December and the 1st of Jan, customs authorities, businesses, brokers, everybody will see an increase of volume of export declaration and import declaration in one night that people estimate roughly at 30-35%. It's like in one night getting 35% of more activities of a totally new business. So that's something that is quite massive. So it means that for a business that only does 5% import or export, let's imagine what it gives. So technically, it is a massive change. So that's also something that we want to give you from a compliance perspective. Irrespective the direction we're looking at, this has a major implication on the compliance. So pay attention. Europe goes for real 1st of Jan 2021. All right. Other point, customs valuation. What I've said in the direction EU UK is unfortunately also very, very applicable direction UK Europe. Customs value, the taxable basis, will be impacted by the fact that the UK is leaving the EU. Why? Because for the same exact reason, UK became or will become, a third country to the EU. So it means that if a good comes first in the UK, is put into a bonded warehouse or in free circulation, in order for you to be able to be entitled to use a lower taxable basis than the price between the UK entity and the Belgian entity, you will have to have a ruling from the Belgian authorities, because I'm based in Belgium, but from the European authorities. That's really important. That's fundamental, even because that triggers a lot of questions that we received, and also quite some work as we speak, to be fairly honest with you, because those companies are looking to get indeed those rulings in order to make sure that they have the taxable basis under control. Here in Europe, it's quite easy, because without a deal, we know what it would give in terms of customs duty tariff. The UK will be considered as a third country to the EU, so normal rates will be applicable. MFN rates will be applicable. So you can anticipate what it would give. And you can also do the math between your price of the goods this is bought from, let's say, the US or China or whatever, coming into the UK at a certain price, and also what will be the price to your distributor in the EU afterwards. And then you multiply that by the duties, and you get a pretty good feeling about what will be the duty hit on the 1st of Jan. So I think that actually this is really important. So now also in Europe, applying for deferment of customs duties, it means to have maybe bank guarantee setting up in order to defer the payment of the duties. That's possible, but of course you need to anticipate that. EURI numbers, either on the side of the UK or on the side of Europe, normally you have 5 days, 3 to 5 days to get them. You can even get them on a one-day type of thing. But there I would like also to make a comment, and it might be only the opinion of Lionel Van Riet, but actually being confronted with that for quite some clients, it's a real problem. Everybody agrees that we need to be ready for the Brexit. We need to anticipate everything. We need to prepare ourselves, and then everybody gets a EOI number. And a lot of companies, whether they're based in Europe or they're based in the UK, they also have requested, well, let's say a UK EOI number, or a UK EU number, meaning that actually you already have a number in the UK, but in order to anticipate, you ask a number in the EU, because as from 1st of Jan, everybody knows that you need a EU EOI number. That's fantastic. But the problem is that you have a guidance document from the EU Commission that says that none of these numbers that have been granted to the businesses can be activated before 1st of January. So you see me coming. You need to prepare yourself. But if you are active in several EU member states, you cannot test that EOI number to see whether everything goes well. If you have an authorization, you cannot use that new EOI number in your authorization in order to test the water. So technically you are allowed to get that number, but you cannot test, you cannot prepare this into your operation, from an operational point of view, just because there is a guidance document that blocks you from doing that. And trust me, a lot of EU customs authorities are willing to help, but they can just simply cannot do it. So there I see a disconnect a bit into the preparation. So looking also at this, consider a specific customs procedure. That's the same. Pay attention. Make this analysis. All right. So Claire, I will take, I think, also the next one on the production of goods in the UK. You produce goods in the UK, and then actually you ship them outside. Which there, what is really important, we focus on several elements. Lead times. Lead times and customs formalities, these are really important in order for you to be efficient when you tackle that one. The certification on the EU 27, of course, you need to be sure that actually you meet the EU certification when you enter the EU. This is fundamental. You produce in the UK, make sure that those products are up to par with the EU norm, because otherwise you will be encountering problems. Also, the notified bodies. There also, There are some changes with the Brexit kicking in after 1st of Jan. So these are elements there that needs to be taken into account. We named a few sectors on the slide. It's not limitative, but these are real problems and real issues that we see in the market. Claire, will you take the polling questions before we try to get a few questions?
Maybe a suggestion that in the interest of time, we would skip the polling question and would go to that we have more time to answer some of the question, because I've seen that a lot of questions are coming in currently. So maybe I suggest that we move on to actually a kind of Brexit action list we have drafted, so which lists the actions which, to our opinion, are very crucial to consider at this point. And then, Leo, maybe you can have a further look at the Brexit readiness and how we could potentially assist to then answer some of the questions raised by the participants.
Yeah, thanks, Claire. Indeed, sorry, so many things to say in even 1 hour and 30 minutes. So apologies if we are going a bit slightly over hour. Just that's you can skip that one. That's a marketing slide. No, I'm joking, but it's how we can assist. How we can assist you. We are used to support businesses on the Brexit assessment, but here with the team, we really wanted to make 3 big buckets. You have the day one readiness. So companies that have throughout the COVID, they have done their preparation. They're ready to go. Actually, they were already to go quite some months ago. So now they're really ready to go. And technically, what they want to do is to say, okay, let's test. Let's test the water before we go to live segment. There, what we suggest is also to discuss with them during a workshop. Then you have the finish line support. Is you have done the assessment, but you still need to do the implementation. You have 70 days to do that. Please don't run away. Do it. Take your priorities, and there, of course, we can assist you with that. It's very high level mentioned there. And then the last one, there will be always people that have not started yet. It's not because it's not started yet that you need to freeze and say, okay, we are doomed. We will never be able to do that. No. There are a lot of activities that you can do in this short time frame and still be efficient in the post-Brexit crisis. So that's what I wanted to say in one slide. From the most prepared to the less prepared. Do not lose courage. You are almost there, but you need to take actions. Maybe for the Q&A, Claire, will you guide us through?
Okay. Yeah. First of all, we received a lot of questions regarding, can we have your contact details? Can we have the slides? So the slides will be shared, definitely. You can find our contact details on those slides. Please do not hesitate to reach out to us, of course. Now, maybe, Leo, can the parties implement trade safeguard measures even in case of a Brexit deal with a limited free trade agreement is one of the questions which were raised.
Yes, the answer to that one, I will not build up the whole answer. The short answer to that is yes. Yes, that is foreseen and that will be possible, limited to a certain extent, with some views on some specific sectors that are more sensitive than others. But actually, I would say that the broad answer to that question is yes.
Okay, yeah. A lot of questions regarding Northern Ireland, of course. So if a UK established company buys goods from the EU and goods arrive in Northern Ireland, should he get an XI prefix? Yes, in principle, but as stated during the presentation, that XI prefix is in fact a suggestion which was made by the European Commission. And because, of course, companies in Northern Ireland belong to Great Britain, then to the United Kingdom, I'm sorry, then of course the prefix, those specific VAT numbers will have to be attributed by the United Kingdom. And as stated, to date, there was no reaction whatsoever on that suggestion. Then another one, Leo, there you go again. An IO certification, which was issued in the European Union, will that still be relevant in the United Kingdom, or should that company apply for an IO certification in the UK then?
Yeah, so two answers to that. A bit macro and micro. Macro level, yes, of course, the UK will not step away from the principle, let's say, of the AEO. So, of course, that will continue to exist in the UK. Maybe that will be slightly in a different form. To be very honest, that's a possibility. They have put a proposal in this regard on the table. That's one. Second, pay attention. What is really important is that if you have a UK AEO certificate, you need to transfer this one, and you have activities in Europe, of course, you need to transfer this one. So being sure that actually that AEO prime country that was the UK will be transferred to a EU member state. That's really important to do that. On the contrary, when you are AEO certified in the EU and then you need a certification in the UK, we are in the process of doing that for some clients. Reach out to HMRC or Customs Border Force, because that's really important to mention that to them in order to facilitate the obtention of AEO or similar to AEO certification.
Okay, and then one final question is for Nadia. It concerns a Belgian company who works closely together with some UK consultants. Those UK consultants come over regularly to the headquarters in Belgium. And the question there is, will they need a single permit? Nadia?
I'm sorry, I had put myself on mute. Yes. And you fell away for the last part of the question. But
reopening the questions. Yeah. So we have a Belgian company, and they're working with some UK consultants. Those UK consultants often come over to Belgium. And there the question was raised is whether those UK consultants will then need a single permit for that.
Well, it depends on whether those persons are doing that on a regular basis at the moment already. If they are able to say that they are frontier workers, so if they do it as a capacity of an employee, then normally, no, they will be beneficiaries of the withdrawal agreement. But if these are new situations as of the 1st of January 2021, then yes, a single permit will be needed. And if they are self-employed consultants, then yes, it will not be a single permit, but it will be a professional card that will be needed. So yes, quite important to see whether this is a current situation that will continue or whether that will be a new situation.
Okay, thank you. In the meanwhile, it's already 2:40, so I think we need to close here. It goes without saying that, as I just stated, the slides will be shared with everybody. For all the people who still posted questions, and questions are still coming in, which is of course very good, but we will contact all those people whereby we can then further discuss your questions during a call. And then last but not least, we want to thank you all for participating to this webinar. We were very pleased to see that there were so many participants. We're also very pleased to see that so many participants stayed until the end, even though we're running far beyond 2:30. Now, So thank you. It is clear that it is again on the agenda of the companies. And in that respect, we also decided to record some podcasts. Those podcasts will go live on our Brexit page of the PwC Belgian webpage. And you will all receive a link to that webpage. And then we kindly invite you to listen to this podcast. And on behalf of the entire Brexit team, thank you very much and hope to see or speak to you very soon. Thank you.